Hi, I'm Ben and welcome to Motivation to Invest. Our mission is to motivate you to invest for your financial freedom. Whether that means escaping the 9-to-5 drudgery or just improving your quality of life, I'm here to help you by providing you with valuable investing tips and strategies. Due to the recent global issue, which shall not be named, the economy has stalled and the stock market has taken a major hammering. Is the world about to end, or is this the greatest time to invest in some bargain stocks? If you believe, like me, that the economy will recover as it has done so many times before from previous recessions, then now could be a great time for you to start investing. Legal & General is a FTSE 100 life assurance, investment management and general insurance provider. It's not easy to judge the exact impact that this global issue will have on Legal & General. But in the company's statement, it did say it has confidence in projected future growth and paying shareholder dividends. Legal & General claims to have a very strong balance sheet with 7.3 billion in surplus capital. And according to the report, significant buffers to absorb any market downturns, which is great news for investors. With Legal & General's share price at 67% below its fair value, could this be a great investment opportunity? In this video, we're going to find out. Let's dive in. Before we get started, go ahead, smash that like button and subscribe if you haven't already. Be sure to turn the notification bell on, that way you'll get notified when I release future videos and stock picks. It's good to be first on the scene when an interesting stock is at a great price. Central banks from around the world have unlocked trillions of dollars worth of funding to make sure the financial system stays liquid and doesn't collapse. So far, their measures seem to be working. In general, has a high level of cyclicality. Its shares have virtually been moving sideways over the past 5 years, despite steady advances in earnings and increases in the shareholder dividend. Strangely, Legal & General behaves like big bank shares and follows many of their patterns. So how did Legal & General perform during previous recessions? During the 2008 financial crisis, Legal & General shares plummeted by 80% following the credit crunch and the recession which followed. Its share price again followed that of the banks, but like the banks, it also bounced back stronger. Legal & General has always been a very cyclical business. However, its recent report suggests that Legal & General has been evolving. Legal & General has evolved into a high-growth, high-return business where it used to be a low-growth, low-return business, according to their report. So how does Legal & General plan to grow its earnings in the future? Firstly, they plan to focus on large markets where they have a small market share and can outpace the general market growth. Legal & General's second tactic is to target growth markets where it already has major leadership and thus can continue that strategy. Recent challenges and resilience. Short sellers have recently tried to push down the share price of Legal & General by suggesting that they were going to cut their dividends. Following Lloyds, Barclays and RBS, their shares plummeted by 10% and then bounced straight back up as they proved the fearmongers wrong. CEO Nigel Wilson confirmed he would pay the 12.6% annual dividend. This £753 million loyalty bonus confirms to me that the company has good faith in its balance sheet and its ability to withstand any short-term issues. Deep diving into the stock here, we can see that Legal & General is trading at 62.6% below its fair value, with its earnings forecast to grow at 4.07% per year, and its earnings have grown over 14.5% over the past 5 years. Legal & General also pays a high and reliable dividend of 9.1%, which is also fantastic. Looking at the risks, we can see that its debt is not well covered by its cash flow, and it has a highly volatile share price. Now, that would be expected due to the recent global issue, so that's not really a major issue. But this debt we will further investigate. So we can see at the valuation here, share price versus fair value. We can see that the current share price is £1.93, which is 60.6% undervalued. Now this software here calculates the fair value of the business. So from this it says the fair value is £4.90 a share. That's what it should be worth, and it's currently £1.93. Price to earnings ratio. So according to compared to the insurance industry average, which is 11, this PE ratio is just 6.3, which is also fantastic. It means it's great value for money. Price to book ratio. It says overvalued, but it's actually bang on the insurance average there, 1.2, 1.2, so that's not really a major issue. Future growth, 4.3%. Past performance, 14.5% historical annual earnings growth. Return on assets, return on capital employed. So this is comparing this to the insurance industry in general. And the company is insurance and investment management. So it's a bit of a hybrid of the two types of industries. Financial position analysis. Now this part is very, very important when valuing a company before investing in them. So you need to check its short-term and long-term assets and liabilities, basically its debt levels. So short-term here, we can see it has greater assets than liabilities, which is good news, which means in the short term, it can definitely withstand any issues which may occur, or this global issue which we're experiencing at the moment. It can definitely withstand that as it has sufficient assets to pay its debts and cover its liabilities. In the long term, we can see it's got slightly higher liabilities than assets. So that's a little bit of a risk there in the long term. Dividend 9.1%, which is great. So it says here the Legal & General's dividend is higher than the bottom 25% of dividend payers in the UK market. This part is another really important part which you should check up before investing into a business. Now, what you want to be looking for is if a business or the people on the board or the director, they have faith in their business, then really they should be buying shares in their own business, especially if they're at very good prices. So what we want to be looking for is that a lot of shares have been purchased rather than a lot of shares have been sold. And as we can see here, there's been no share sell-offs in the past 12 months from insiders. And purchases, there's been a lot of purchases, which is a great sign. So insider buying. Insiders have bought more shares than they have sold in the past 3 months. And as you can see here, it's buy. 1st of April, a lot of transactions then. 4th of March, 2nd of March, quite a lot of transactions there. All throughout the year as well, even before this current event. There's been a lot of purchases, which is great. It shows that the people on the board have a lot of faith in the company. A lot of them by the same person here. Let's see who he is. John Oliver Kingdom. He's the chairman of the board. So the chairman of the board has obviously got a lot of faith. It might be something to do with his employment, where he can choose stock options, because he's got a lot of purchases. But it just shows the company has faith in their own business. So that's just something to be aware of. But also a little tip on this insider trading, although it is a positive, you do need to be aware and still assess the company yourself in terms of its earnings and its potential growth and its current share price, because what some industry and businesses can do is they can purchase a load of shares to inflate the share price, then sell them all off really fast when the share price increases. So that's a risk which you just need to be aware of. So all that glistens isn't gold. So just that's just a little tip for you there. But in this case, I've got faith that these are all genuine purchases, because looking at the company's previous progress and its dividend, it seems like it's at a pretty fair price at the moment. So why wouldn't you be buying shares here? Overall, top management teams at Legal & General have faith in the future of the company. They've even put their money where their mouth is by completing a large number of insider trading purchases in Legal & General, which is great to see. The dividend growth strategy also looks set to continue, as does earnings per share, which grew by 16% in the previous year. Over 5 years, the shareholder payment has increased by over 50%. And with a PE ratio of just 6, this offers a great margin of safety when investing into Legal & General's shares. So I did purchase shares in this company. Be sure to check out my other videos where I analyse 5 stocks I purchased during the previous stock market crash, which has seen me up by £1,000 in just 7 days. Now, as a long-term investor, this increase doesn't really make a difference to me, but it's still nice to watch your portfolio grow over such a short period of time. This suggests a possible V-shaped recovery from this recession. I also have a video reviewing the free trading apps, which make it really easy to get started investing. I've included a couple links below, which will give you a free share when you sign up. But remember, on this channel, we don't give financial advice. So please evaluate the stock yourself, research it yourself, assess your own investing goals and your own budget before investing into any stock we mention on this channel. I would love to know your thoughts on Legal & General as a business and as a stock, so please do comment those below. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.